Hello, my name is Jim Croft, and along with my Kellogg colleagues, it will be my privilege to work with you on June 29th as we focus on nonprofit financial management. During our session on the 29th, we're going to look at two broad topics: financial statements and cash management. The section on financial statements is going to focus on how we are able to hone our skills in reading and interpreting financial statements that are produced by nonprofit organizations so that we can manage our organizations more effectively. We're going to, through discussion and group activities, look at a number of nonprofit organizations and see if we can make sense of what the statements are telling us. I've also put out a request that you bring your statements, and please do so. And we're going to spend some time in the session looking at the financial statements for the organization in which you work. But this video is really focusing on the second section, the cash management section. As a practitioner, a consultant, and an educator, I have concluded over the years that it's cash that really is the driver that helps us to accomplish our mission. We have to have the resources to do what we're setting our organization in motion to accomplish. And managing cash is very important. As a matter of fact, I believe that nonprofit organizations should have cash budgets as well as operating budgets so that we are always aware of where we are and that we have the ability to manage our cash most effectively. And I, over that time, found a tool that I thought was really helpful. And it was on the website of the Wallace Foundation. And this tool helped us to manage cash in a way that I hadn't seen before. And so I've used that tool with clients. And I'd like to share it with you during our session because I think it's an effective tool to help you prepare a cash budget and to monitor the cash budget throughout the year. The reason I'm presenting it in this format in the video is that we have a limited time on June 29th to get together and discuss cash management. And so I thought we'd take the time to look at the tool now and get familiar with it so that we can maximize our time together on that day. So without further introduction, let me share my screen and present to you the cash management tool. I'm just going to move this around so you can see the tool effectively. The tool, as you can see, shows a 12-month period, and it's broken into three categories. One category is for cash receipts, the second for cash disbursements, and the third for cash capital and capital financing. The key in the upper right-hand corner tells us that if the cell is yellow, it's an input cell. If the cell is gray, it's an output cell. So keep that in mind as you put information into the tool. The budget of the organization will be put in this column, which is column E in the Excel spreadsheet. And it will allow us then to spread cash receipts or cash disbursements by month as we understand them to be coming in and going out during the course of the year. And then we can use this column to be sure that we spread all the dollars that we have here. There's also a column on the far right, it's a check column. So if we make an error, we'll be alerted over here that something doesn't add up properly. So let's begin a quick walkthrough, and I'm going to, with your permission, I'm going to increase the size of the tool so that I can better see how to type in the information that you would be typing in for your organization. We're going to start at the top with the name of our organization. It is our organization. I had to pause to be sure I was spelling it right. The tool is set to show us a calendar year, and we start in January and end in December. But I also know that many nonprofit organizations have fiscal years, and a very common fiscal year is July, June. So if you use the drop-down box and put the first month of your fiscal year in the drop-down box, it will automatically populate the remaining months correctly. Then we also need to start the model with our beginning balance. And the beginning balance for the model would be the ending balance for the prior year. Now, you may not have the ending balance at the time you're putting the model together. So you'll, at that point, want to give us the best estimate that you can. And then as you get closer to the beginning of the fiscal year and you finish your year-end bank reconciliation, you can put the right number in here. Because one of the nice features of this tool is that you can update it as you go along so that it's always current. You start with the budget, and then as you go along through the year, you can update numbers. And I'll get back to that in just a moment. So let's put in a couple numbers just for illustration purposes. Before I do that, though, I'd like to also call your attention to these plus signs that are over here on the left. These plus signs will allow us to expand these various categories so that we can put additional information in to help us. For example, if Foundation 1 decided they were going to give us a grant of $200,000, we would put that grant in the column for the current budget year. We'd also want to spread that, and Foundation 1 said they're going to give us $100,000 in September, and they'll give us another $100,000 in April. So we can do the spreading of that so that we know where the receipts are coming in the appropriate year. And as we go along, you'll see that it's totaled here and there's no variance, which is a good thing. We can do the same for all of these categories that you see in the model. We have corporate, and we can expand the corporate. We can expand individual. We can expand government grants, state grants, and any other revenue items that we might have. And then we come to this curious section here that says prior year receivables. Now, it may be that you had a revenue item in your budget that you showed in your accounting records as revenue, but the cash hasn't come in at the end of the year. The cash, let's say that hypothetically, the revenue was given to you in a pledge in June, the beginning of June, and the donor said they would not be able to give you the money until August. So if that's the case, and let's say it was $100,000, we'd put $100,000 into the prior year carryover column, and I said August, then we'd put $100,000 into August. So that helps us to populate the model correctly. So what we will do as we're putting information in this for our institution, and as we do our exercise on June 29th, we'll populate the receipts column with the items that are in the operating budget. And remember, only use those items in the budget that have revenue components. And I'm saying that because net assets released from restriction is merely a movement from net assets without donor restriction and it's moving net assets with donor restriction, I should say, to net assets without donor restriction. And then, of course, on the disbursement side, we have depreciation, which is a non-cash item. So let's do that for all of our receipts, and then we'll go to the disbursement section. In the disbursement section, we have a number of items that will allow us to put in the budgeted numbers that we have accounted for our fiscal year. And just like the receipts section, these items will expand so we can put additional information in the model. So the model is not necessarily set up to replicate all of our chart of accounts, but we can pretty well do it by expanding and using these columns for items that are not in the model. Now, one of the items that I particularly want to mention in this illustration is salaries and wages. And let's just assume that our organization has, through the course of the year, budgeted $300,000 for salaries. Now, we know that in most organizations, compensation will be one of those expenditures or disbursements that flows evenly through the year because we're paid either weekly, bi-weekly, or monthly. Just to save time, if that's the case, we can go to column F and we'll be met with a drop-down box and some instructions that tell us that we can answer one simple question. Is this a repetitive or equally spread disbursement or not? If it is, we click the yes box and you see that the model has equally distributed our salaries over the year, month by month. And we can do that for any of these items. And just to be sure that you understand, that option is also available up here in the receipts section. And of course, I have nothing in there, so we have equally distributed zeros. So we're going to, throughout the input process, put information into the model that is consistent with the budget in this column, and then we're going to spread it according to the month that the receipts, cash receipts, come in, or they go out, or they're dispersed. And do that throughout your whole budget. And finally, if you do plan a capital expenditure during the year, and so we're going to assume for this illustration that we're going to have a capital expenditure of $50,000, and it will occur in the month of October. And that will consume cash. But we also have the ability to use a line of credit to help us to finance that activity, and we can put that in here as well. 50,000. I don't think we should draw 500,000 from the line of credit. So that will give us the ability to show how we're financing those activities, or if we're financing them from current cash, we would have no cash receipts section of the capital. So what you will do for your organization and for the group activity on June 29th is to add all of the receipts, disbursements, and capital items for the nonprofit organization that we will be working with on that day. And I will provide the budget for you for that group activity. The other thing I'd call to your attention, is the rolling cash balance line. This tool literally focuses on the bottom line. And here we take the beginning cash balance, which we added a few moments ago, plus the receipts, disbursements, both operating disbursements and capital receipts and disbursements, and we have an idea of what our ending balance will be each month. The objective is to keep this positive and to keep as much in the rolling cash balance as we can to comfortably meet the needs of our organization. The final item that I'll mention is that as we go through the course of the year, if something changes, we can modify that. Say Foundation One tells us that we're going to get the first $100,000 payment in October rather than September. We can make that change. And also, if we are operating now in September, we can go back and put the actual amounts of cash receipts and disbursements in July and August. So now we're working with 8 months of projection, or 10 months of projection, excuse me, rather than the whole 12-month fiscal year. And that way we can continue to update the model, and it gives us the ability to monitor more effectively our cash during the course of the year. Because as we put the actuals in those months that have actual activity, it also gives us actual numbers in the rolling number and causes the new rolling number to be much more accurate. Well, that will conclude my review of the cash flow model or the cash flow tool. We're going to be using this on June 29th. On that day, I will give you a copy of the cash flow tool, and I will give you a budget of a nonprofit organization. And in group activities, we'll put the budget in the tool and we'll make some determination of how well that organization has budgeted their cash. And if they have problems, well, maybe we can make some suggestions to them on how to correct those problems so that they have the adequate cash to accomplish their mission during that fiscal year. Well, I hope this is helpful and that this is a useful video that will help us to get familiar with the tool so that on June 29th, we can spend the majority of our time actually digging into the tool and seeing how it works so that we can take it back to our organization and have what we need to more adequately and effectively prepare and monitor our cash. Well, until I see you on June 29th, let me bid you a good day.